Mswatu inkosi ithula akayithathe akahambe nayo yadenza bakhe wone
Your time now is 2 p.m. You're watching another weekly edition of Market View ERS Text Talk right here on Eswatini TV. I am Nothlesi Tole, glad to be your host. A defining moment for Eswatini and the continent as the Africa Strategic Investment Alliance is officially launched, with its headquarters set to be here in the kingdom. This Pan-African and AU-endorsed platform is a bold structural intervention aimed at transforming how capital flows into Africa's real economy. This alliance comes at a time when MSMEs are grappling with limited access to finance, informality and market access, with these businesses being the primary source of income for the majority of entrepreneurs and women owning approximately 60% of MSMEs. Can the AFSIA finally unlock the capital and the opportunities that have long remained out of reach for local entrepreneurs, especially women and the youth? We'll speak to MSME Director in the Ministry of Commerce. But first, our business stories. Moving on to our business news, the Africa Strategic Investment Alliance, AFSIA, has been officially launched, with its regional headquarters to be established in Eswatini. The launch took place at the Eswatini Revenue Service headquarters in Eswatini. His Excellency, the Prime Minister Rasa Dlamini, urged the alliance to develop innovative financial solutions to support African businesses, enable access to capital and promote economic growth across the continent. The Prime Minister was represented by the Minister for Public Service, Honorable Mabulala Masego, who reaffirmed the government's commitment to supporting the success of the alliance and strengthening Africa's investment landscape.
Without access to affordable and scalable finance, entrepreneurs cannot expand production, they cannot innovate, they cannot compete in regional markets, and without vibrant enterprises, the promise of AFCFTA cannot be fully realized. Ladies and gentlemen, Africa's development journey increasingly requires African solutions designed for African realities. For decades, access to capital for enterprise development has often been externally structured according to the financial systems that do not always align with Africa's integration agenda or the operational realities of African businesses. What Africa needs today is an institutional architecture capable of mobilizing and deploying capital at scale in ways that directly support productivity, enterprise growth, and employment.
The Minister for Finance, Honorable Neil Regenberg, says ministries of finance and economic policy makers in Africa must develop policies that support resource mobilization and improve cross-border trade to ensure the alliance functions effectively.
For finance ministries and economic policy makers, the challenge goes beyond enterprise development. It directly affects economic diversification, fiscal sustainability, and long-term economic resilience. Traditional finance systems alone cannot close this gap. Many existing financing mechanisms remain collateral-based, fragmented across borders, and insufficiently adapted to the realities of African enterprises, particularly those engaging in cross-border trade and regional value chains. What is required is institutional innovation platforms capable of aggregating capital from diverse sources and deploying it efficiently to support productive economic activity.
Interim Chief Executive Officer of the Africa Strategic Investment Alliance outlines the objectives.
Its objective is very clear: to connect capitals to a productive entrepreneurs across Africa, enabling business to grow, export, innovate, and create jobs. This initiative aligns with the ambition of Agenda 2063 and the implementation of the Africa Continental Free Trade Area. However, if this continental ambition are to become a reality, Africa must also build its own financial and investment architect capital of supporting entrepreneurs' development.
Dr. Monique, chairperson of the advisory board, says the success of the alliance lies in collaboration.
ASEA seeks to serve as a platform through which governments, development partners, development finance institutions, private investors, and other partners can work together to mobilize and deploy capital in support of enterprise development, supporting also job creation and economic transformation across our continent.
Eswatini Revenue Services Commissioner General Brightwell Ngambule outlines what the service is doing to support and uplift SMEs.
At Eswatini Revenue Service, we have a very supportive presumptive tax regime to lower barriers for small businesses, reduce compliance costs, and encourage formalization. Under this regime, the applicable rate is 0% for businesses with annual turnover less than 50,000 emalangeni, and 1.75% for businesses between 50,000 emalangeni and 500,000 emalangeni. And that translates to a maximum of 8,750 emalangeni a year.
The Minister for Finance says businesses will be kept fully updated on how they will benefit from the alliance, stating that logistics are currently underway to establish the regional office in the country. Reporting, Nelswin Dlangamandla, Vuminkosi Nzenisa, Ezulwini.
And that is your business brief. We'll speak to Director MSME in the Ministry of Commerce right after this.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back. You're still watching Market View ERS Tech Talk. Moving on with the program. In our main story, we highlighted the launch of the Africa Strategic Investment Alliance, AFSIA, with headquarters set to be in Eswatini. The alliance's main goal is to unlock capital for productive sectors of the economy with a strong focus on women and youth-led businesses. It will work hand in hand with the African Electronic Trade Group, AE Trade Group, a social enterprise and multi-stakeholder partnership aiming to boost intra-African trade through digital technologies. So what does this mean really for local small and medium enterprises, and how will they stand to benefit? We're now joined by the Director of Small and Medium Enterprises, Mluleki Dlamini, to unpack how local, micro, small and medium enterprises stand to benefit. Good afternoon, Nkosi. Thank you very much for your time. Allow me to just have this disclaimer up for our audience. We are going to have a bit of a network challenge in terms of your visual, but thank you so much for joining us this afternoon. I do note from our report that AFSIA aims to unlock capital for productive sectors. If you could just fill us in on the mandate of the alliance, how significant is it for Eswatini's MSME sector in this moment?
Thank you very much, Nothilek. Basically, the Africa Strategic Investment Alliance is an alliance that wants to bridge the gap of financing for micro, small, and medium enterprises in the country. They are coming in with assistance in terms of how our businesses can access finance, and they have specific sectors where they'll be discussing with various businesses, and I believe that these discussions are ongoing now, and also the business associations that are in the country, they will also ensure that their members do benefit out of this collaboration that as government we have embarked on with the alliance. And we are also saying that there are also other organizations that can affiliate as well to the alliance in terms of getting that kind of assistance for further extending it to our micro, small, and medium enterprises. So this basically is a project that we're looking for, that it will have an impact in terms of ensuring that the gap on financing for MSMEs is addressed.
Speaking on the financing gap, it has been cited multiple times, Kosi, that it's one of the biggest barriers for especially SMEs. Quantifying that financing gap, how much of it could the AFSIA realistically address?
Because as we speak now, the financing gap for MSMEs is over 2 billion emalangeni. So we're looking forward that if the alliance can be in a position to try and raise funds through other international investors, so that we are able to make sure that what is available for our MSME in terms of finance can be sufficient or can be adequate, I would say, so that they can venture into all the businesses. As you recall that we did during the presentation, highlight that our MSME contribute about 50% of the country's GDP, and they employ over 100,000 of the population in the country. And in a way, they do address issues of unemployment. And such initiatives will make sure that they continue with their business to ensure that they close that gap.
Because the MSMEs do make up the majority of businesses in Eswatini, with over at least 70% of them operating informally. How does this limit their ability to access the kind of funding that AFSIA is promoting, or rather the partnerships that are being promoted or availed by the alliance?
Yes, part of the program will start by formalization of businesses, and then after that move into a stage of providing mentorship and capacity building for those businesses that are not ready for such financing. But those that are ready, we will be linking them with markets, regional markets, and also ensure that we get them into value chains, and also link them with the foreign international customers, and also assist them in terms of moving their products to their final destination in terms of regional markets or international markets.
Before we talk access to markets, allow me to ask, with MSMEs struggling a lot of the times with collateral requirements and high interest rates, does the alliance aim to change this reality in any way?
Indeed, it's part of what they are bringing in as a game changer. Because when we look at what they will want to achieve is a zero non-performing loan as one of the things that they want to make sure that this pilot project does achieve. So we are saying that when they work with various institutions and also businesses in the country, collateral should not be something that businesses need to be concerned on, but we're looking at business viability and also making sure that businesses are profitable and also contribute meaningfully to the economy of the country and through employment and also revenue collection as well.
With the alliance set to focus or the focused on what is deemed as productive sectors, which sectors would you say are being prioritized and why is that the case?
As an agroeconomy, basically we'll want to prioritize agriculture and also make it a point that we go through the value chain of agriculture so that we can produce local products, not to import most of the products that we're consuming. So we are moving into non-exportation of raw material and making sure that we process raw material and export finished products in that sector. But also, obviously, we'll also move into other sectors where we believe we've got a competitive edge in terms of production. We are looking at light manufacturing as well, and also building on textile that is already there to get more local business to participate in the textile industry. And, forestry has always been there. Also issues of livestock. We are building that sector. And there's also one that we are targeting. Mainly, it's the processing of leather and leather products in the country, and also the establishment of a leather tannery as well. So those are the projects that we feel that they can make an impact if we can invest in for our MSMEs.
The launch of the AFSIA in the country already, and also, with the headquarters said to be premised here, it already screams opportunity for some SMEs that are already watching. I hope it's not too early to ask, do we have targets, Nkosi, in terms of how many MSMEs locally are expected to benefit from funding under AFSIA in the short or medium term?
I wouldn't have the specific numbers, but those that are ready can come forward, and we would be looking into onboarding them and starting the process of them benefiting out of this initiative. But the number is endless, I would say, because when you look at the kind of interest and also the effort that government is putting with the alliance, we are looking forward into making a great impact in the economy.
By ready, maybe you can show the steps that an MSME would have to take in order to participate fully and benefit under AFSIA.
Obviously, the first thing is just that businesses need to be fully registered and also make sure that they are tax compliant. And we know that businesses operate using business plans, so they should have all of those documents ready. And there should be existing businesses that have got broad potential, but obviously we do have startup businesses that will consider at some point if we believe that they've got that great potential. Then I think from there we should be able to start before the end of even this year to see benefits coming out of this initiative.
In my bit of reading about AFSIA, the focus does lie on women-led enterprises and youth-led enterprises. We do have a youth unemployment rate of about 50%, and women own close to at least 60% of MSMEs in the country. How will you ensure that this majority, which is often informal, access the funding that is being availed or at least promised under AFSIA?
Definitely, that's a promise that as a ministry we would want to undertake, because obviously this initiative was made to benefit them. So we'll be reaching out to all of these businesses and assist them to better benefit out of this initiative when we get into the rollout phase.
We also did mention that AFSIA will work closely with the African Electronic Trade Group, AE Trade, Can you explain how digital platforms, digital trade platforms will help local MSMEs, with their ability to scale and access regional markets?
Indeed, e-trade is an e-commerce platform that will ensure that our domestic products can be traded regionally through the African Continental Free Trade Agreement, and then they can then get funding under the alliance. So basically, these are the two projects that we are linking together. So when we go through
Ngozi, are you still with us? Right, my apologies there. We have just been interrupted in a conversation with the Director MSME, Luleki Dlamini. We were unpacking the recently launched Africa Strategic Investment Alliance, AFSIA, which is actually said to be headquartered here in the Kingdom for the benefit of women-led enterprises and especially MSME that do make up a large proportion of Eswatini's economy. Moving on with the program, we'll go for a break. After that, we'll speak to in-house economist Sanele Sibia. This is Market View, ERS Tech Talk.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Welcome back. Moving on to our market analysis. In-house economist Sanele Sibia joins us virtually. Mr. Sibia, good afternoon. Pleasure talking to you. How are markets digesting the latest policy signals from the Fed?
Thank you, Notile. A good afternoon to you and also good afternoon to the viewers. So what we're seeing in markets today, Notile, is somewhat of a, let's just call it an incursion, somewhat of a rampage, where we're seeing across the board, losses sprinkling through regardless of where you are trading from. We have the Dow Jones Industrial Average hitting, a 2-year low. This is something we've not seen in the past 2 years around the Dow Jones Industrial Average. And we're seeing in London the S&P 500 coming down to some levels, on the closer 10 type of mark. So that the type of market we are dealing with today, where it's just carnage across the board. So that's largely driven by the fact that we're seeing Iran, attacking. They attacked a oil installation in Doha, in Kuwait, and we're also seeing, the very same Israel actually did hit some energy infrastructure in Iran as well, and then Iran retaliated by striking that LNG plant in Kuwait. So we are in essence looking at markets that are responding to those news. And when we are looking at what is happening in terms of overall when we are looking in terms of what's happening overall on the energy space, we worry that, prolonged attacks on energy infrastructure is going to have quite a market impact on the market. So that is what
we are seeing happening today in the market. So in the US, yes, we are seeing overall red with the Dow Jones Industrial Average getting down to those old 2-year lows. Losing a significant 786 points, and the Nasdaq Composite Index, which we're somehow looking at as one of those indices that were going to remain quite steady. They're losing 327 points, because the tech space seems to be navigating this crisis far better. The S&P 500 is down on that 6,624 type of 70 mark. Also just heading back to those all-time lows, as we're seeing it heading to that 12-month low. And in London, we have the FTSE 100 trading at 10,061, and that means it's getting closer to that 9,000 mark. We've been seeing the FTSE 100, we've seen London rallying since the last quarter of the year. We remember shifted and we moved from 8,000 in all share volumes, and it went to 9 and then eventually the 10,000 mark. So these attacks on energy infrastructure really are hampering the European markets because, if you recall, back to the Russia-Ukraine war, we saw that Europe really suffered in terms of the price of Brent crude, and today the price of Brent crude is currently sitting at $114 per barrel. So Europe really is on edge around that. And if you go to Germany, Germany is on all-time lows type of region, losing 566 points so far in today's trade, and sitting at 22,935.37 in all share volumes. And France has actually lost 141, France in today's trade. So now that is largely driven by the fact that Europe is now on edge over that energy infrastructure, and most likely we'll see the return of inflation in Europe, while we know that Europeans are still contending with a relatively high inflation rate. And we are just worried and looking forward to see if this war is going to come to an end. And then crossing over to Asia, just like Europe, is in a very serious quagmire when it comes to the issue of, the attack on energy infrastructure and the Strait of Hormuz remaining closed there, because Asia was reliant on transportation of their oil through that Strait of Hormuz. And what we're seeing them in Japan, or not today, are sitting at 53,372.53 in terms of all share volumes, losing 1,856 points in today's trade, signaling the vulnerability of the Japanese economy to these oil shocks. But we do know that Japan has oil reserves that they could actually pump out into the markets, but we've not seen any signals to that effect coming out of Tokyo. In Hong Kong, the Hang Seng Notsile has actually lost back on that 524 points, back on that 25,500 mark. Really just going back to below those pre-COVID levels. We're expecting it to go back to that below 25,000 mark if this continues, which would be below the pre-COVID levels, showing that, traders in that part of the globe are really anxious and on edge. And then in Shanghai, the Shanghai Composite Index is, climbing down closer to that 4,000 mark. And we expect that as these attacks on infrastructure continue, it should come down to the 3,000 mark there. But we've had news coming out of Beijing that, the Chinese government is thinking around thinking around opening those and utilizing those fuel reserves to ensure that the market stays on course. Gold has actually lost not to the back to that 4,223 marks, losing 272 points in today's. A interest rates increase, which makes equities and interest-bearing assets relatively lucrative compared to gold. Brent crude oil sitting on 114 in today's trade, driven by the attack on energy infrastructure. In terms of there is Johannesburg Stock Exchange. Johannesburg Stock Exchange is sitting at 110 in today's trade, losing 5,000 points, reflecting both the loss of value in gold and also the rise in the price of Brent crude oil there. So there's a couple of vulnerabilities that South Africa is dealing with. We've not seen any changes in Eswatini. The currency remains relatively weak, but gaining a few cents against the dollar in today's trade and also gaining a few cents against the euro, but losing overall against the Japanese yen. Thank you, Nathan.
Thank you very much, Mr. Sibia. That was in-house economist Annelies Sibia showing insights on the day's trade. This has been the weekly production of Market View ERS Text Talk right here on Eswatini TV. From myself and the crew, thank you very much for staying with us. Until the next edition, take care.
kude lesinye isikhathi ngaphandle kwalesi
aba-researche bafunze.
Being risky means ukuthi nalokuwa kwayo kulula.
Nathi kufuna sente ukukhicita lokusembili.